Propelled by loose monetary policy in the aftermath of pandemic lockdowns, investors' increased risk appetites meant that more money than ever flowed into crypto. Venture capital funding analysts showed that crypto startups received $25.2 billion in 2021, compared to $3.1 billion in 2020, the year before, a 713% increase. All sectors in the crypto industry saw strong growth, with VC funding from NFT firms exploding to $4.8 billion from only $37 million in 2020. In total, the share of blockchain venture capital funding of the entire global venture capital market grew from 1% to 4%. 2022 is shaping up to be a more challenging year for crypto venture capital firms, but risk-aversion capital will continue to flow into the growing crypto industry in the coming years. As a retail investor, knowing the main players in the crypto VC market can make the difference between a profitable and unprofitable investment. But before we get into that, my name is Trev, and here at CoinMarketCap, we are on a mission to make crypto accessible all around the world. And that's why we love making videos for you that are packed with information that are easy to understand and simple to share with your friends and family. So if you want something more than just hype and to actually learn about crypto, then make sure to hit the subscribe button right now and to turn on notifications so you're not going to miss out on our new videos. And let's learn together about the top crypto venture capital firms. So how does crypto VC funding work? Well, crypto VC funding has a few commonalities, but also differences with general VC funding. Generally speaking, VC funding describes a pool of investors looking to multiply their investment by investing early in a company. Before investing in a company, they review different projects by assessing their growth potential and the potential positive return on investment. VC funds spread their investments in order to minimize their downside risk and potential volatility. So standard venture capital funding happens in 5 stages. So the first one is pre-seed. The project is at a very early stage, often no more than an idea, and investments come from family and friends. The next one is seed round. The product is testing its viability, which includes market potential analysis, competitor analysis, and developing a minimum viable product. At this stage, pitch decks, cash flow, roadmaps, and materials are used to seek out investors actively. And the next one is Series A. The product is validated, growing, and backed by a strong community. Investments at this stage are less risky for investors, but more expensive and focus on marketing and advertising. The next one is Series B. The product has a massive user base, is expanding, investment focus is on marketing, sales, human resources, business development, and customer service. Next one is Series C. Focus lies on diversifying product lines and access to international markets, and the product is commercially viable. However, crypto VC funding is quite a bit different, because not many projects get past the initial 2 stages. And while there are some examples of Series A fundings like Praxis or Rarefy, and Series B funding like Dune Analytics and Palm NFT Studio, only a few companies have reached the maturity of FTX, which raised $32 billion in a Series C funding. However, a few other factors make crypto VC funding different so that even big companies without massive market capitalizations do not necessarily open additional funding rounds. For example, most cryptocurrency projects raise money through tokens instead of equity. While tokens effectively mean equity in a project, raising money through an ICO or IDO instead of selling stocks means that investors take on a different type of risk. Buying tokens through an ICO lets investors cash out their stake earlier and more easily, but products are often less sound and less trustworthy than their stock selling equivalents. And furthermore, crypto projects require a different type of marketing, as platforms like Google and Facebook restrict the extent of traditional digital marketing for cryptocurrencies. This has led to cryptocurrencies heavily relying on influencer marketing and guerrilla marketing methods, limiting the extent to which a product's viability can be tested before launch. In conclusion, crypto VC funding is quicker but more trial and error based and involves much less regulation. VC funds can and often do support projects with influencer marketing, utilizing their relationships in the industry. This can raise a project's legitimacy if established VCs back it. However, it can also backfire as crypto VC funds face headwinds for introducing tools from traditional finance, which goes against the decentralized ethos of the crypto industry. So let's talk about the biggest crypto VC firms. Several investment funds have emerged as the top crypto VC funds over the last few years. So the first one is Three Arrows Capital. Founded in 2012 by Su Zhu and Kyle Davies, Three Arrows Capital is considered one of the top hedge funds and market makers in the space. Three Arrows Capital holds stakes in several big blockchains like Ethereum, Avalanche, Bitcoin, Polkadot, Terra, Solana, and many others. It also has investments across several DeFi and GameFi projects like Axie Infinity Infinity, Aave, and countless others. Three Arrows Capital invests in equity-based blockchain projects too. The next one is A16 by Andreessen Horowitz. Founded in 2009 by Mark Andreessen and Ben Horowitz, Andreessen Horowitz, known as A16Z, is a Californian crypto VC firm that also invests in non-blockchain based technology companies. Like Three Arrows Capital, A16Z has stakes in many top crypto companies like Coinbase, Celo, MakerDAO, and others. Next one is Alameda Research. Alameda Research is a crypto hedge fund founded by FTX founder Sam Bankman-Fried and is now headed by Sam Trabucco. It also has stakes in the most important blockchains and blockchain-based companies. Mezariah lists that Alameda Research has stakes in Bitcoin, Ethereum, Binance, Solana, Uniswap, and countless others. Next one is Jump Crypto. Jump Crypto is an investment arm of Jump Trading, another crypto trading fund with offices in Europe, Asia, and North America. Its mission statement is called Modern Slavery Statement in a tongue-in-cheek way, presumably referring to the uniform nature of comparable mission statements. Jump Crypto also has stakes in Solana, Terra, Wormhole, Phantom, and many other projects. Next one is Digital Currency Group. Digital Currency Group calls itself the epicenter of Bitcoin and blockchain industry. Its mission is to build and support Bitcoin and blockchain companies by leveraging its insights and capital. Digital Currency Group has investments in Coinbase, CoinDesk, Kraken, and countless other blockchain protocols in its portfolio. And the next one is Coinbase Ventures. Coinbase Ventures is the investment arm of Coinbase, a popular centralized exchange for cryptocurrencies. While several other crypto VC funds have investments in Coinbase, Coinbase Ventures itself also has an investor in projects like BlockFi, Compound, Starkware, and many more. Next one is Binance Labs. Binance Labs belongs to Binance, yet another famous centralized exchange. Binance Lab leverages the Binance DEX to invest in new crypto projects, and its portfolio includes stakes in Terra, Moonbeam, and Coin98, among others. So let's talk about the top crypto VC funds. Crypto VC firms and crypto VC funds are essentially identical, although funds in this category are often owned by the venture capitalists and hedge funds mentioned before. So the first one is Paradigm. Paradigm is a crypto VC fund backing crypto companies with stakes between $1 million and $100 million. It follows a flexible, long-term, multi-stage, and global approach with crypto investing and helping teams with technical and operational questions. Examples of Paradigm's portfolio include Agent, Optimism, and OpenSea. Next one is Multicoin. Multicoin is a thesis-driven investment firm that invests in cryptocurrency tokens and blockchain companies. It is a crypto VC fund that participates in staking, liquidations, and other crypto operations. Its portfolio includes stakes in Audius, Arweave, and the Near protocol. The next one is Pantera. Pantera pitches itself as the first US institutional asset manager focused exclusively on blockchain. Since 2013, Pantera has been investing in essential blockchain infrastructures like exchanges, custodians, institutional trading tools, decentralized finance, and more. Its portfolio features stakes in Coinbase, FTX, Polkadot, and others. The next one is Draper VC. Draper Associates was founded in 1985 by Tim Draper and has turned into a venture capital firm for industry transforming companies. While Draper also has investments in technology companies, its blockchain investments include positions in Bancor, MakerDAO, and Tezos. The next one is Polychain. Polychain is a VC focusing on blockchain-based digital assets, and its most notable investments are in Acala, Celo, and DYDX. And the next one is Framework Ventures. Framework Ventures focuses on the global transition to decentralized technology. As a thesis-driven venture firm, Framework Ventures partners with founders and teams building crypto economies and scalable communities. The VC firm holds several investments in the DeFi space in protocols like Fee, Rari, and Zapper. So the big DeFi VC funds. Besides crypto VC funds that are focused on investments in blockchain technology and crypto companies in general, there are also specialized DeFi VC funds. These often take smaller positions and are comparable to boutique venture capitalists in tech. So the first one is Petrock Capital. Petrock Capital is a Singapore-based VC focusing on multi-chain protocols. It was founded by alumni from Goldman Sachs and PwC. Investments include Step Finance, KlimaDAO, and Radium. Next one is TRGC. TRGC is a DeFi fund based in Amsterdam and New York, focusing on DeFi applications. Its portfolio consists of investments in Polkadot, Reef, Kava, and other DeFi-focused startups. So the next one is Fabric Ventures. Fabric Ventures is a DeFi VC based in London. It backs investments in the open economy with a focus on decentralized finance. Among its 20 plus investments are stakes in Angel, Liquid, and Hashflow. And with the emergence of NFTs as a major blockchain technology, dedicated NFT and metaverse VC firms have popped up. Like DeFi VC funds, they are mostly similar and specialize in investing in metaverse and GameFi projects only. Next one is Animoca Brands. Animoca Brands is one of the leaders in the metaverse VC firm space and was ranked in the Financial Times list of high growth companies in the Asia Pacific region in 2021. It has investments in several significant metaverse and NFT related projects like the Sandbox, Axie Infinity, OpenSea, Draper Labs, and several others. GenBlock Capital. GenBlock Capital has been involved in the blockchain space since early 2017 and is a VC fund with focus on decentralized finance and the metaverse. Some of its main gaming oriented investments include Aurora, Affinity, and Blocktopia. The next one is MetaPurse. MetaPurse is an NFT investment fund and production studio that specializes in identifying early stage blockchain projects across blockchain infrastructure, finance, art, unique collectibles, and virtual estate. It has investments in Decentraland and Nifty Gateway. Hey, did you guys like that video? Well, if you did, then you're gonna like some of our other videos, and in fact, they're right here. So make sure you go and click on those right now, because if you like this video, you're definitely gonna like those. So yeah, check them out. What are you doing? Go watch them. Check them out. They're right here.